you are joining me at this hour. Welcome to 575 edition of InvestData Trading Academy Live with Ambrose. Yes, the market at the overall market at the last trading day of the last trading week, of the month of January, the first month of 2026. This is last week, and see that how things can move fast. When we say Happy New Year, I'll tell you that the global market as we speak now is already moving in a mixed direction. We're seeing some mixed activities in different markets. It shows that yes, the sentiment has changed. Result is coming. Fear of another trade tariff on Canada, and also the outcome that will be from Fed this week. All these things are playing out now right away as we speak in the mature market, and that is what we are witnessing right away now as we speak. And for me, there is no cause for alarm because this is how market in anywhere create wealth for investor is your ability to adjust and have a trend and understand the trend and also trade your plan. This is not time to just to follow the bandwagon. Investment or trading, you need to have a trading plan and also implement those trading plan to stay ahead of the market and also grow your bottom line at the end of the day. As we speak now, I think that the Asia market or stocks are missed ahead of what Fed meeting, even as we are seeing that the Japan index or what we call Nikkei 225 is down as we speak, with almost 2% as a amidst yen appreciating that global currency as we speak now. I'll tell you that also have slowed down export because of what higher yen, and you can see how appreciation in exporting environment or market or economy. How can as we speak now, these have affected Japan export because of what high currency. Now I can tell you that even a plan of intervention by US in all this is what's playing out there. But as we speak now, like I said, Asia market is made at this hour as market analysts and also embrace coming the crucial Fed meeting. This is the first meeting for the year. Later this week, to determine where rate will be going. Even as market players, across the globe are with earnings because we are seeing that tech companies and others are kind of focused this week, seeing result hitting the market. These are the things that will shape this market this week. That's why I said, as investor, you must pay attention to where the market is going. But generally, I tell you that the stock market, across the globe are moving this week, this morning at a weaker footing, but we're seeing light. Don't forget this is the end of the month, the last week that we're going to see end of the month. What will happen towards the end of the month? Let's see how it's going to play out. As we speak now, tell you that US index that closed the last week at a weaker point or on a negative note. Let's put that. Why was it that trend is what's happening this morning as the Asia market has resumed. But I mentioned earlier that Nikkei 225 index is down by nearly 2%, extending the recent week extending the recent weakness in exporters as yen strengthened sharply against the US dollar amid speculation of currency market intervention by Japan and what Japanese and what and the US officials to support this currency oscillation. But I believe that the stronger yen also really has hurt the Chinese export, as I mentioned earlier. Overseas earning is also slowing down and also adding to risk of what trading in Tokyo as we speak. But don't forget that as we speak, because of this trend, we're seeing that gold have soared even above 5,000 yes, but as we speak, sorry, I work it out once. As we speak now, it's heading for almost 5,000, 5,000 and 5,100 as we speak right now. As still everyone people want to move to gold and other commodity in the as an investment option or window. But I believe that we want to watch all this and see. But I believe that for those that are running for safe everyone demanding for all this commodity, it's also a way of trying to say that investors are looking at how the global economy is going, looking at the political tension, trade tension. All these are what market players are factoring in that. Spin up, there's caution ahead. Saying okay, let's see how the Greenland and the between Europe and the US is going to go about. And these are the things that are going back. But speak now, whereas South Korea right now So South Korea also is on the South Korea is also pulling back. That's what I said. And don't forget that early the day we saw that also that China or Chinese shares or stock market as we speak is largely stable, and this our while that of Australia is up by 0.1%, and Singapore also down by 0.4%, while in Indian market as we speak is witnessing a public holiday. It's closed for public holiday right away. But I tell you, all eyes are still on a Fed meeting and heavy, tech companies releasing their number. As calendar have reviewed that this week we're going to see more. This also, give market direction. That's why every investor are looking at what will shift the trend we're seeing now in the market. Looking at a means of ongoing inflation pressure, and all this. We agree that the comment from Fed chairman and others later in the week will also shape sentiment across the globe. That's why every investor must look out for this economic event, especially from central banks of Nigeria, central banks of the world. In the act of controlling flow in terms of money, and the liquidity is very key in equity investment. Now, for me, let's keep our eyes. All eyes are still that in Asia, Samsung Electronics are expected, and other big names as well also to release their results this week as scheduled. But I think that investors are cautioned around the AI linked stocks, because of overvalue perception they were looking at, the underperforming also what they are seeing in some sections. These are the things that the concern they are having. But I'll tell you that the market participants remain cautious ahead of both the policy and earnings that at least are what's going to catalyze trigger rebalancing optimism, and also when it comes to tech companies and also driving the long-term growth generally with what we're seeing with the macroeconomic and also currency risk that's also kind of resurfacing. These are the things that so we move to what is happening in Europe. I think that Europe market has opened just marginally or narrowly green as to speak now. If we look at the index from London, which is a FTSE index, is green with 0.2%, and that of Germany index is also which the DAS is down by is flat. Sorry, it's flat as to speak now. While that of France CAC 40 is down by 0.2, and that of Italia market as we speak now is up marginally by 0.1. That is for what is happening right now in this market. But finally, look at what is happening in US for us to go toward Africa and also look at our topic for today. If you look at US market, I think that market as we speak now is starting on a flashish note as we speak now. I would say we're seeing that the last trading week for US market is just on a very flat mode now. Even as all eyes also looking at the pending Fed decision in terms of rate announcement, and also stemming from also seeing company result this week. Also, like I said, we shape the market. Don't forget that this sent new tariff threat from Trump after slowing down for Europe. Now it's looking at Canada, after Canada has signed a big deal with the China trade. These are the things. Is it will continue to insist to trade with the tariff trade from US? What is for that? Say that the US market is already muted. Can say that this market is very flat right away as investor gear up to for this busy week where they are expected to see more earnings. The Fed having their policy meeting, and more corporate earnings hitting the market. These are the things where all eyes are going to see right now. Spirit and Jules is unchanged, flat, like I said earlier. While S&P has just hit down, kind of put down marginally by 4 points. That's about 0.1, and also I see that also that Nasdaq also has dropped also by 0.1 as to speak. But I'll tell you that investors are still looking at even the extended the missed close that the market recorded on Friday in that zone or that market. But all eyes are that the blue chips index, which is the Dow Jones average, and also S&P are also looking at the declining this week because of depending on the numbers and also on what we are going to see in terms of outcome of it. All these are weighing on sentiment in the market. Prior section and all to this one, making active for this week, and also as far eyes are still on chip makers result, and as well analyzing the one that came from Intel that was below expectation. These are the things that markets also factoring to see what to catalyze the market this period. Like I said, the exposure to the AI, what we call artificial intelligence stocks, I've seen that is slowing down. That is part of what's also, but we hope that yes, the growth tension will start easing. But with all these investors are factoring all this risk into equity and all that, I can see that there's a movement toward to seek even investment window. We're seeing that gold is looking up to almost 5,000 for a young. Let's tell you that what it is for traders as they call it that. Let them look at data that will come also to see the state of these economies. But I believe that the US economy is becoming solid with the recent data that came. I believe that albeit that see that high income from household and corporation are also support. I believe that the outcome of the Fed also will determine what the market globally will look like. Don't forget I said whenever US Fed sneeze, the other market or other cash go. We expect to see the outcome of this meeting as policymakers are in a way of stabilizing the rate at this. So I'm thinking of court. But let's see how they're going to start the new year 2026 at the end of their meeting during the week. Let's see how it goes. Let's keep our finger crossed. But move to Africa. I think that Africa market, as we speak, it's also missed right now. But if you look at the major market in Africa, look at NGX here. NGX is marginally flat. For me, it's a good news for our market, and our market is in that mode right away. Well, it tells you that yes, our market is still strong anytime, any day, even when we're seeing profit taking activities in the market. But we're seeing that there's a positive footing in the market ahead of earnings. Even when there's pullback, and we're seeing kind of a slim market breadth or gains this period. But the good thing that we're still seeing buyers take position, looking at those companies that are yet to move to position. As I said, as we speak now, and just is flat. Look at what is happening in Ghana market, Kenya, and Egypt, and finally South Africa. This market and most of them are in green. But I can tell you that it's a good week that they're starting today. Why I say this is the last trading week of the month of January, and more earnings are expecting to hit the market, especially in NGS. I expect that this is the last week. Most of the companies that ask the paper and will release on the account, those that want to release early so that they can release their corporate action or with their account on before 31st of March. But we do that release the result this week. We expect to see that by before the end of February, we're going to see their result with their corporate action, that is audited account. But for me, this week we'll see more, and those audited accounts as they're coming are going to give more insight. We saw the one that came from Unilever, insight that giving as we speak now, even at the price the stock is selling, the possibility of where the earning will move up, but not representing that we might see a bigger payout. But I tell you, the strong numbers show that if that trend continues, and with relative MFS, we're going to see more numbers coming positive from that sector, consumer sector in Nigeria. For me, it's a good one. But now let's look at the market data. What is happening on NGX right now? To speak now, okay, that NGX has opened on the green. Good one trading so far. The trend range we are seeing right now is between 165,450.60 and to 165,797.69. This is the trading range we have seen so far in the market. As we speak now, the market is trading at 165,389.25. Market is off by 177.07%. That's about 0.11% in the green. Good one. If you look at market breadth is still positive. About 23 stocks are in green, while 15 are also looking down in the red. But good news that our market is trying to extend the kind of pattern we saw yesterday, and that is why our today's topic is more on how can we profit from trading pullback profitably. What are the strategy we have to adopt at this time so that we can take advantage of what this market is doing, and also the difference between market pullback and market correction or market reversal. Market has been an uptrend, and if you look at it now, you can see that market is making one higher high. And these are the things that we should pay attention to, because when people call and ask questions, is it the time to jump out or jump in? I say, you have your own trading strategy. When you are seeing a market pulling back and a market reversing, there are different scenarios. When a market is pulling back, all you want to talk about what is the trend structure of the market. Is the market making higher lows or remain that if market is making higher highs or higher lows, and this means that is purely that that is a pullback we are seeing. But when you see market making lower lows, and that creates fear. That is what you should avoid when you want to trade pullback. You want to see that yes, in a pullback the market is doing higher lows and also higher high, or markets are trending. But when you see that market is making lower lows at that particular time, it's creating a reversal. You need to avoid that state. You need to wait to see the because you don't cut a falling knife. That's why you must pay attention to trend structure in a time. Also look at volume at that particular time to see if the market having a low volume or declining, on the dip. If you are seeing that, even when market is pulling back, you are seeing that the volume trade is low or declining just marginally, you can buy it. But when you see that market is declining, you are seeing higher and increasing volume, on that drop, instead of that, yes, that's not time to jump in. You need to wait to work to see where the market is going to land before you. That's why you must know the difference between when market is experiencing a pullback or a reversal. You must know because you must pay attention to it. It's very, very important. Also, the speed of the pullback is very, very important. Is this slow or we are seeing orderly decline? When you are seeing fast and panic driven selling sell-off, you need to also be careful. But as I speak now, we are just seeing a slow decline or a flat market. It tells you that yes, market is still waiting for a trigger. That is why you must look. Also, what are you going to use to get to look at? Like here in this class, we don't play with what our T line. They want to say call up here. Our T line is what our 8 days moving average exponential. This is very, very important. I will have that background. That is what you used to know. So can say okay, they want to use the 20 days moving average, 200 days moving average. When it cross below, or when fine 50, 200. It depends on your trading strategy. That's why I say you must have a plan. For us in this class that used to follow me using this the 8 days moving average, you want to see that if the markets are trending, if the market trading above the moving average. Here, if it's market trend above, that means the market is still strong. If it's market trend, that is a weak market. And don't forget that in the class was said you buy into a weak market and sell into a strong market. And that is why as market have weakness, what we call a technical rally from December, tactical rally to all we have seen to this recent days we are seeing markets are trending. It's for you to take profits on stock we have made profit. It doesn't mean that you should sell down because at the winning trade you take profit slowly so that you can see what, especially when the fundamental of that stocks and also market policy, market sentiment and government policy is running that sector for that particular stock. You don't jump at one because if you jump at that price, if you want to come back, you want to buy high. That's why you take price, you take profit slowly so that when the stock will go up, you are still in that position. These are the things. But for those that want to use some, moving average or to see where the market is going, like I said, for us later, I have to call this quickly. We look at what price, and index or price with a moving average. That means that we use exponential. Like I said, if price stays above the T above the T line, that is good. That means it's a pullback. When you see that and price is still above that 50 moving average, or 200 or 100, that the market is still what is still very, very is still also positive at that particular time. And that's why also, but when you see that yes, price have broken down the T line, they are think go below 50 or 200, you have to be very careful in that regard. That is why I say let me start this way because if you want to trade profitably your pullback, you must understand all it takes to trade what a pullback because that will help you to make money with that pullback. Right now, as the market is pulling back or kind of trending, for me, it's for you to wait for what to confirm where the market structure, like I said earlier, is the trend structure is very, very important. But either this is the most reliable time for you to buy into valuable. And now we are buying at a discount within this this trend that means that yes, market is not on a downtrend. Even as we speak, like as the market is still trading on the top on the T line. When it crosses, then we are buying now. You buy with what? With caution and buy into stocks that are yet to move. And that's why I said are selling at a discount because trend after that, yes, it is not a decline market, and rather a pullback practice in the market, and this also will not send panic yet. But for you, you're looking at let me not just expose myself much in the market, but let me buy into value and buy what in stages to see what the number is, especially in a market that all eyes are still on earnings that are coming what next week. This earning will shape the market. We must pay attention to this. That is the only way you can trade and pullback profitably. And in trading profitably, you must start, like I said earlier, you identify the trend context. That is where the trend is going. Once you're able to identify that with the help of the T line I just mentioned, either you're using 50 days rule or 20 days rule or 200, it depends on you because I believe that that pullback works when you see that the primary trend will remain intact, and also if the market also is also moving on a sideways chopping, no, that also tell you that this time market is looking for a trigger. But when you see pullbacks that are likely to turn into losses, also you have to trade with caution. But like I said earlier, when you are seeing markets making higher highs and higher low, that tells you that the market is still not that trend is still, structure is still very, very up. We are seeing likely to make a new, to make a new trend. But a pullback is the first, dip, and that is also market opportunity for you to buy, but still at that high. That is also what you should have at the back of our mind. And not just saying, pullback, we must understand the stage of that pullback. And also don't forget that in this class, I've been talking about what we call the value area. You need to know where to buy. Is the position of the stock within the value area? What is resistance, resistance, and resistance support? For you to know this support, this resistance support, this support, you're able to buy in between there, that when results come there will break out. But don't forget that when the stock is falling, where you know that it can fall, more than that, also when it go up, where it cannot break out, and that is what we call the value area. You must pay attention to this value area, even as you wait for a trigger to see buyer move in one direction. But once you are in this situation, knowing this value area is very, very important for you, because you need to know what is the floor, the support level, where is the lift, where is the peak, to see that if where it's coming or where it is now, and there's the support level, if the result come, can it push out to that breakout? Even when can it get to another break where it can stop, then you cannot trade within that value area. Oh, it's at support level now. If the result come, you cannot see what you're going to make between the support and the resistance there. That's called the value area. You must pay attention to that. And also don't forget that I strongly believe, using your word, your T line is very, very key. This moving average will help you to see if the trend is strong or weak. You will know. And I tell you that when you see that the trend is above the T line, yes, or it's bouncing around it, tell you that it's a strong one. But when it crosses that, even though you are doing using 50 days there, 20 days there, moving average exponential, the same principle of using a 50 days simple, it's simple bouncing around it, so that yes, there is still potential. It can also come, what can you use in terms of the velocity level? At this time, we are looking at to see a price that will retrace between 38 point, or also between 38 to 61.8, to see whether it will retrace at that level. It's also very, very important. And also, you must confirm a trigger. That trigger is key, because I tell you, this is where many investors make, or traders, sorry, when they make a mistake, buying into a story that you are not seeing the price is already on the downward trend. You are seeing price running, there's no trigger to that, it will go up. But when you're expecting this number like we're looking at now, you can see the number also is coming to change the trend, to change the sentiment in the market. That's the problem. That's why I said you don't catch a falling knife, that when you see market already on the negative side. No, but when you see that market is forming a good hammer in terms of the candlestick, you are seeing that there's a what called engulfing candle. You are seeing, that means you are waiting for what? A bullish move. And then when you see these hammers and the government in the chart we are using, on the price action we are using, but that is the price action is key. It tells you that yes, it's a bullish candle pattern. You want to look at what will happen next within that value area that I always tell you. Pay attention to this value area is very, very key. And that value area, seeing the kind of this kind of chart pattern, or sorry, candle pattern, that help you to make one decision. And also, when you are seeing also, is the market, what is the rate of the market? Don't forget that in our technology, as to have overbought and over. So also in fundamental, we have overbought and overvalue, overpriced and underpriced, and all those stuff also happen. Then you want to know where is the RSI. When I mean RSI, I'm talking about relative strength index, not relative strength to the market now. I'm going to see what is the strength. Is that stock for the market at overbought region? Is it at what? At oversold region? When you are seeing this kind of move, even with the pullback, you are seeing a stock at oversold region. You are seeing that yes, it's still within 40 to 50 or 30 to 50. You can ask, okay, if possible that earnings come, when we turn around, we also take advantage of that. Like I said at the beginning, that yes, in that move, we are seeing that a lower volume is what pull the market down, or pull the stock you want to buy in. That means you cannot buy on that depot. When you see that it's a big volume, you need to also trade with caution. Or like I said, because volume speak, it tells you story. Just like I tell you that anything you are seeing a price, there's a story behind that price. When you see this volume, it gives you an insight to what you are going to do with that. Also, don't forget that in any trade you are having, risk management is very, very key, and that's why you must set up your stop loss placement, or so that you know exactly when to protect your capital, because that is key. Most people, like I said, if you have entered any stock without plan to get out, you have no plan. You must have a stop loss. A stop loss to take profit, to protect your capital. Stop loss, profit taking to profit target. Sorry, profit target to take your profit. You see, this is very very important. Any trade you are trading, you don't have stop loss, you don't have profit target, you are not trading. You are just guessing. You are just following a bandwagon. You must have a stop loss and a profit target. When you stop loss, market go against you, stop loss will help you to exit. When the market go in favor of you, the profit target also help you to exit, because no stock remain up and no stock remain down. And don't forget that many people that see no paper profit before they know it is probably because they don't have good profit taking strategy, because they don't have good exit strategy. You must have all these at the back of your mind so that you can trade profitably in any market. Especially when you have to pull back to position, you must have all this at the back of your mind. Your stop loss is very important. Your profit target, which also help you to take profits, also very very important. You must have the reward to risk ratio that you use. Have what if I make this amount, if I put 10 million in the stock, if I'm making okay, another 4 million, I'm making 2 million, I'm making 3 million, I need to take and come back. These are the things. This will help you, because you want to also break even in your trading. Don't forget that in any trade there must be element of risk, and you must also take this risk and also take calculated risk, and also know when to drop out is very very important. I'll stop here to look at what the market is doing, so that we can also conclude where was the market is heading. Looking at the index right away. Let's look at the top gainers. I mentioned them already. We're having, like I said 23. The market was up. Right now, let's see how many we can take in terms of looking at their price performance right away. But it's good to just mention few of them that are leading in the top, and also those that also are the bottom as to speak. But we're seeing that low caps are the stock that are dominating right now in the market as to speak. Let's quickly look at them. Like I said, they are 23. But let's look at these low caps that are down now, so that you can take advantage of those stocks now to watch the momentum behind them. Will they continue in that direction? That is one thing that you should have at the back of your mind. When you see all this kind of stock dominating, as to speak now, we're seeing that low cap, we're seeing the Union Home, real estate investment is leading, followed by, you can see deep capital. You have to take with caution. Also, you can see ROT disco acceleration. But I think that yes, one of a aviation company coming up to almost 100 and nine or 8 now. This is a company that is paying you six kobo, 2 kobo, 25 kobo. Even you have to at this price, what is in for you? That's why I say yes. Fundamentally, also technically, can see sentiment. That's why don't be carried away with one kind of move. You need to put your trade, exit plan, and your entry plan also to activate them. These are the position of the market now. You can see these are the top 5 I just mentioned that are leading in terms of gain. Was I've mentioned, sorry, okay, I've mentioned that in terms of loss, looking at the decline, we're seeing Royal Exchange, this insurance company, Royal Exchange, we're seeing, Sovereign Trust, we're seeing, UCL, and also, Augustine last, and this and also an Ella Lake. These are the ones that are fully back. We're seeing also profit taking in CWG, which is part of the market. Profit taking also in Cavaton, NEM as we speak right now. But for me, these are an opportunity for you to buy to the store that are fully back, so that you can take advantage of it. It is what I will tell you at this time. There's no cost for you to panic, but this is an opportunity to buy into value as market also is gradually moving on. But let's quickly look at the few stocks now. We're seeing that I mentioned Red Star before. Red Star is among the gainers. We're seeing UPDC of the rate of capital. We're seeing NASCOM going back to 114. And also, these are the ones that I get. Like we can see the Universal Insurance, Infinity Bank, Access Bank, Sterling Bank, Jais. We're seeing all of them. Mutual benefit all coming up gradually again at this hour. On this note, I will say thank you. But before I say that, let's look at what is happening. Now we're seeing Sky Aviation, particularly what is happening in NASCO in terms of momentum. You need to see opportunity now where you should be building your tent. Yeah, you can see this morning, this is a daily chart. You can see the formation trading above the T line. There's still strength in this stock. You can see here. For me, you can watch this stock for positioning. Let's see 1 hour chart for NACO. We can see on 1 hour chart, you can see that it's trying to break out 111, 150. You can see the once it's able to break out this 127 point, 127 point. Was able to break it out. That is where I mean, you can jump in and so also fully or take an opportunity now that the price is below that to position is very, very key at this point. I mean, yes, you can look at it here. This is where you should pay attention to 127, 25. We go to 124, 25. See, it's not 27. But you can see that if you look at this stock now, there's one thing you can see in technical analysis that are terrible. If you look at this, and when you see stock that is forming this kind of pattern, what we call it in technical analysis. So, system forming this pattern, there's anybody that understands technical analysis will see at the end and you see what is it telling you to buy, it's telling you to sell. You pay attention to this, this big volume technical analysis. You need to pay attention to this. This is what we call what I see here. You see a breakout either up or down. You can see where it is now. When you start breakout here, when you break down here, if you break down there, it must come around the 100 before a pound. But when you see it, like you can see where the support level here. Let's pay attention on what this stock very well in the market. I see a lot of potential for those that will to take calculated risk and also buy into value is a place also to watch. On this note, because my time is fast spent, I'm already giving me a sign. I will say thank you for your time. We look forward to see you on Wednesday, hopefully by God grace. On this note, I'll say bye. See you